Okay, hi guys, just sharing my screen at the moment. I know there's been a few problems with one of the platforms trading live this morning with the audio feed, so thought I'd jump on and just record just a short briefing of the state of play this morning, because we've already seen some pretty sizable price action.
For Standard Chartered, they
Starting off with the British pound, we've seen move to fresh new 31-year lows. We have in fact breached briefly, have yet to really consolidate the move, but that 131.33 you can see here, top left hand corner, that was the post-Brexit low. Again, slightly longer dated chart here, you can see that was the fall on the night, and then that test the following Monday, and we've just briefly broken that. So that's something to keep an eye on. So far it's found a bit of support since we've gone through 10 a.m. this morning, but overall markets trading on the back foot. General risk-off theme, predominantly emanating this time from Italy. Concerns over their banking system re-emerging. You've got the shares of Banca Monte Paschi, one of the world's oldest banks and the third largest lender in Italy. They're down 9.4% at the moment. They were down 14% yesterday. So they're really getting hit hard at the moment. This all comes after it was revealed yesterday they've been told to shed a further 10 billion euros in bad loans by the ECB. Other Italian banks have seen a slight bounce. Some talk about potential cash injections coming the way of the Italian government. But likes of Paschi, again, it's down as much as or over 70%, coming up to 80% now year to date. That as in combination, as I was mentioning in the briefing this morning, with the political uncertainty in Italy surrounding Matteo Renzi. Again, he has been quite outspoken, suggesting he is prepared to defy EU rules on state aid to banks and pump billions of euros into the country's troubled lenders if necessary. Keep in mind, the people of Italy, much like other countries we've seen before, unlikely to be a very popular move if he starts pumping billions of pounds of public cash into bank stocks, which have been failing, and in the case of Italy hold an extraordinary amount of non-performing loans, the largest by far in Europe. Elsewhere as well, looking bottom left, oil's remained under pressure. The dollar at this point in the session seen slightly firmer, up around 0.1%. Technically as well, we've already moved through S1 close toward 47.50, where the S2 resides just below. You've also had a couple of reports about later statistics saying that OPEC is still pumping on increased levels in the month of June, allied to some of the facilities coming back online following recent militant attacks in the Niger Delta, likely as well just acting as a bit of a downside pressure for crude. And if that continues, then obviously that does tend to feed through into the equity markets. Just looking at the DAX here, top right, has been under pressure since the off. Found a bit of support initially around the 9600 level before just making another push lower, with the pressure being seen in the periphery so far this morning. Again, data-wise, other things that we have seen, you had the release of the UK service PMI. Didn't really have so much of an immediate impact. Again, one thing to keep in mind, although it was relatively in line, an important statistic here is that 89% of the survey was submitted before the results of the EU referendum. So it's only a very small proportion is actually accurate to encapsulate the aftermath of Brexit. Therefore, the data really is largely insignificant, and that's why August is such a key month for the Bank of England, because by then they would have had data which has all of the Brexit impacted stats, and then that's also when they'll release their projections, their latest quarterly inflation report. With that in mind, just be heads up for 11 o'clock this morning, 45 minutes time, you have Bank of England Governor Mark Carney is speaking. He's speaking, just checking on the Bank of England press office, it's the publication of the July 2016 Financial Stability Report, and more importantly, it's also the press conference. This is going to be closely followed by intraday traders, predominantly because Carney gave some very clear hints of further easing in the summer, and so it'd be interesting to see if he adds any more meat to the bones, so to speak, to what form that easing may take and when precisely it might happen. Cable at the moment, I guess you're defined kind of resistance on the intraday, now seen at 131.90 upside. I guess the question mark is when the US come in, whether or not this 31.30, which has been briefly breached, will hold up, or whether we'll see a consolidated break and then the next target being down at 131 and below. US afternoon as well, don't forget, it's fairly busy. US participants also coming back to market after their day break for Independence Day holidays. You've got IBD tips, factory orders, durable goods orders. They're all coming out later on, 3 o'clock for the main data coming out of the States. Okay, thanks very much. Bill will be back on the Strat to go over at midday for the US session. Enjoy the rest of your day though.